Let's get a check of the top business news stories. Kate Moody, our business editor, is here. Hi there, Kate.
Hi, Tom.
The rising cost of energy is very much front page news here in France, as it is elsewhere. The government is extending its aid for consumers and businesses. Tell us more.
Yeah, well, not quite as wide-ranging as the price freezes that were brought in earlier this year, but still some aid for both households and small businesses. Starting next year, price hikes in both gas and electricity bills here in France will be limited at 15%. Some 12 million low-income households will receive another round of direct aid, so-called energy checks, of between 1 and 200 euros each. That new package is expected to cost the state some 16 billion euros. Earlier this year, France fixed gas prices at their levels from October of last year, and electricity bills were only allowed to rise about 4%. Now, France is less exposed to the slowing supply of Russian gas than other European neighbours because it depends more on nuclear power. And energy providers here say that despite issues with some reactors, they don't expect blackouts in France this winter. The government, though, has urged consumers and companies to voluntarily reduce their energy consumption. Prime Minister Elisabeth Borne saying that every bit counts.
Only restraint and European solidarity will allow us to avoid cuts and rationing in the most pessimistic scenarios, such as a particularly cold winter combined with supply difficulties. These scenarios encourage us to pursue our strategy, voluntary restraint rather than imposed cuts, and European solidarity to better resist the winter.
Meanwhile, EU Commission President Ursula von der Leyen has said she will push forward with plans to impose a windfall tax on energy firms that are reaping in the profits of high prices. The plan could raise 140 billion euros in the coming months, money which would go towards aid packages across the 27-member bloc. Inflation in the UK unexpectedly dipped from its 40-year highs in the month of August. Consumer prices were 9.9% higher than a year earlier. That's down from 10.1% in July, and the first drop in monthly inflation figures in nearly a year. It's likely because petrol and diesel prices steadied last month, although that didn't help things in the United States, which on Tuesday announced higher than expected inflation of 8.3%. Food prices in the UK jumped by their biggest margin in some 14 years. The Bank of England has been raising interest rates since last December in an effort to curb inflation. The central bank has postponed another hike, which had been expected on Thursday, following the death of Queen Elizabeth II. The bank has warned that inflation is likely to peak at 13% later this year. Let's check in on the day's trading action now. The major European indices closed in the red, steeper losses in London and Frankfurt. Shares of the German utility Uniper slumping 18% on reports that it could be nationalized. A mixed picture on Wall Street as stocks try to recover from their worst single session in over 2 years. After those higher than expected inflation data, investors are now preparing for another round of big interest rate hikes by the U.S. Federal Reserve at its policy meeting next week. Google has lost a motion to overturn a more than €4 billion antitrust fine in the European Union. The General Court upheld a 2018 ruling, slightly reducing the penalty, but doubling down on the judgment that Google does restrict competition on its smartphone operating system. Google could still decide to appeal to the bloc's highest court. Cami Nedlek has more.
It's a win for European regulators clamping down on big tech. One of the EU's highest courts largely upheld an earlier ruling which found that Google had broken the bloc's antitrust laws.
Having made the conclusion of revenue share agreements conditional on the exclusive pre-installation of Google Search on a predefined portfolio of devices.
The EU courts say the tech giant throttled competition by forcing phone makers which use its operating system Android to take on its own apps, such as the Google search engine and the web browser Chrome. Google expressed its disappointment in the court ruling, arguing Android creates choices rather than limiting them. The court slightly reduced the original fine from over €4.3 billion to over €4.1 billion. Google watchdog Fair Search, which launched the original complaint back in 2013, says the biggest losers are the users themselves.
I believe that consumers would be better off today had they had genuine competition in the search markets. Had there been one or two really significant competitors to Google in the search market, I believe we would have seen a difference in innovativeness in search.
This is the second EU antitrust case that Google has lost out of 3. The firm could stand to be fined a total of over €8 billion by EU regulators. Google's parent company Alphabet is worth over $1 trillion.
Waiting to hear if Google will indeed appeal that decision. It seems likely with that much money at stake, Tom.
Yeah, it's a lot of money. Thank you very much indeed. Kate Moody, our business editor. Thank you. Let's find out what's happening in the world of sport.